makers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Tom McKenzie in London. President Trump's $100,000 fee on new H-1B visa applications is triggering confusion for corporate America and for workers. The move is aimed at cracking down on what the White House calls abuses of the program, which they say undercuts American workers.
Everyone's going to be happy, and we're going to be able to keep people in our country that are going to be very productive people. And in many cases, these companies are going to pay a lot of money for that, and they're very happy about it.
The restrictions and fees came into effect on Sunday. Let's bring in Bloomberg's chief Asia correspondent, Ros Matheson, with some of the context and the details. Why, Ros? Let's start with the question of why this has been implemented, what the rationale is from the White House, from President Trump, to make this change.
Well, as you're saying, this was a really abrupt announcement and very quickly coming into effect, hence all the confusion. But this is part of these very major abrupt policy changes we're seeing coming under the Trump White House. And a big part of it, as you were saying, is about preserving jobs for Americans, bringing jobs back to America. I mean, obviously, these companies argue that they are creating jobs either way in America. But the rationale, at least from the White House, is that they see this as a program that has been open to abuse because there are many, many, many more applications every year than there are spots. And so you've got a lottery system, and they say that some companies tend to try and game that lottery system by filing multiple applications for their workers because currently the fees are not that big to do so. So the companies can afford to really spam the lottery in a way with multiple applications for individual workers to get a better shot of that worker getting one of those prized visas because, again, many more people wanting those visas than there are visas available. That's the rationale, at least, from the White House in doing this. But as you're saying, because it came so quickly, because it's such a big increase in the visa fee, and really it does impact India companies above all, there's big questions about what it means for these workers and what it also means going forward for the US-India relationship.
Well, indeed, as to whether or not this is another leverage or at least pressure point that President Trump is using in that rift with India. Ros, when it comes to the question as to who is impacted, do we have clarity? Is it current visa holders? Is it future visa holders? What do we know in terms of who is in the spotlight at this point?
Well, this happened so quickly. There was a lot of confusion initially, whether this was a policy that Donald Trump just conjured on the fly in the minute, because it wasn't clear initially, does it impact people who are existing visa holders or those who are hoping to come in the next round of the lottery? It took a day for the White House to clarify that, in fact, if you do already have one of these visas, you shouldn't be impacted. But because of some of these abrupt changes, the way that we've seen also visa changes for people coming in to study as international students, confusion around that, you're seeing companies say, well, just to be on the safe side to their workers, if you're in the US, stay where you are. Do not travel overseas at all. If you need to come back to the US, do so quickly to avoid any chance of inadvertently being caught up in the confusion around this. But technically they're saying it doesn't apply to workers who already have these visas, but it will impact a lot of people who are getting ready to go into the lottery to hopefully come into the US, especially, again, those workers from India, because the vast majority of these visas go to workers from India, these big outsourcing companies coming into the tech sector in the US. And that's, again, where you're going to see impact on those workers. Do people still try and apply? Do those workers now stay back in India going forward? That's going to be the big question.
OK, Ros Matheson in Singapore with an important update on the visa changes coming out of the US and the potential impacts. Ros, thank you. Now to what is happening in terms of relations between China and the US, because a group of senior US House representatives is in China right now for talks with President Xi Jinping's government, the first such official visit in 6 years. The US group is led by Democrat and former House Armed Services Committee Chairman Adam Smith, as the world's largest economies edge closer to a potential trade deal. Bloomberg's Jill Desus is in Hong Kong with some of the details on this visit. Jill, just give us the context in terms of how significant politically but also economically this meeting is.
Sure, Tom. Yeah, this is a really interesting one. I think, as you mentioned, obviously meeting with some of these Chinese leaders. This is a group that met earlier with the Premier Li Qiang. So he's really China's number 2 in command. They've discussed apparently fentanyl. Obviously, that's been at issue in some trade issues with the United States. We've also have some conversations about nuclear proliferation and also artificial intelligence. So you have a pretty wide remit there of issues that have come up during these chats. I do think that, one thing that continues to be interesting, is this idea of, this following the Trump-Xi call. You also have this continued prospect of an in-person meeting that could be taking place between Donald Trump and Xi Jinping in Asia, in a month or so. So I think that idea of that delegation, as you mentioned the first time, they've really had this kind of a visit in 6 years, coming to China, really does kind of speak a lot for the ways in which the U.S. and China, despite a lot of the tensions that they have going on, still trying to maintain some of those really close political and economic ties there. So, this group is going to continue to have some meetings. We'll see kind of how those goes. But yeah, I think some really interesting developments there.
Yeah, and clearly one sticking point has been the fate of TikTok, hasn't it? And President Trump has suggested that Fox Corp chairman Lachlan Murdoch and his father, Rupert, of course, are involved in this US takeover, at least potential takeover of TikTok from its Chinese owners. Let's take a listen to what the president had to say.
We're going to have a very tight control. And look, it's an amazing thing that's been created. There's tremendous value with TikTok. And I'm a little prejudiced because I frankly did so well on it. It got me numbers that nobody's ever even heard of before. So a lot of people want it. The young people of this country want it badly. The parents of those young people want it badly. And so we were able to work out a deal with China. And it's a very good deal for us. I hope it's a good deal for them.
Well, Jill, where are we in terms of actually locking this deal down, finally, for TikTok? And what is the time frame that we're looking at?
Yeah, well, Tom, I think, we're still waiting on some more details on what exactly this deal looks like. I think at this time, in addition to what we just heard from Trump there, this idea that the Murdochs could ultimately be involved, we've also heard that there's, potential investment stakes here from Oracle, Andreessen Horowitz, the investment from Silver Lake. I think the idea would be to sort of minimize the amount of investment stake that ByteDance, the Chinese parent company, ultimately has pretty significantly. So that's really what's under discussion here. Perhaps we'll get some more details just kind of as this continues to crystallize, because this has been such a big sticking point in trying to get that Xi-Trump meeting together within sometime over the next 6 weeks or so. But I would just point out, Tom, it kind of reminds me of back during Trump's first term in office when we were looking at actually not that dissimilar ideas behind some kind of a tie-up with American companies such as Oracle or some such. So it's really interesting to watch all of this just come around again, a good 6 or 7 years later, but obviously with some of those new names in the mix, including the Murdochs. So we'll have to see. I'm still waiting for those really, really fine details on how exactly this thing is going to work.
Yeah, there's still some granularity that we need to hammer out before we know that this deal has actually crossed that line. Bloomberg's Jill Desis, thank you very much indeed for that update, with the US lawmakers continuing their conversations, of course, on the ground in China. At this point, let's bring Christian Keller, Head of Economics Research at Barclays. Christian, thank you for joining us. I was going to start on the Fed, but actually I'll start on China and the US. If we get some kind of deal, and we don't know what that deal will look like, but if we get some kind of at least formal ratcheting down of trade tensions between the US and China, it looks like they're on a path that could lead to that this year. What would that mean for your outlook for the global economy?
I think the outlook is already quite good, and I think markets already no longer worry that much about the U.S.-China relations. I mean, I think if you think in April, at some point we were at mutual tariffs of over 100%. That came down quite quickly. Now people see that there's some negotiations back and forth, but it seems, it came through quite early that there was no escalation superiority by the U.S. that could really corner China. And since then, it's kind of a game between equals, really, when it comes to it. The rare earth superiority by the Chinese. And now they're going to find a way. My feeling is not that markets are expecting a big fallout. So it would be positive if there comes a deal. But I don't think it has been on markets' minds anymore that much.
So it may not materially change your view on the outlook for the global economy, because it's already, to some extent, kind of factored in?
I think so. If there's not something grand where suddenly, really tariffs will be reduced much further, because we do see it in Chinese exports. The Chinese are suffering from it. They were able to divert a lot of their exports away from the US to other parts of Asia. If you look at the recent numbers, the reduction in exports to the US is hurting the Chinese economy. Now, if that was taken away, that would be another positive, so to say, in already quite an optimistic environment, I would say.
To the Fed, then, with your expectation that there's a further 2 cuts this year, that's your view at this point. To what extent is a resurgence in inflation a risk to that view?
I think that there's a risk. I don't think it's imminent. I think those 2 cuts to the rest of the year are more or less baked in if there's not really a massive surprise on CPI. I think it's more about 26, whether they continue. We have 2 more cuts for 26. I think markets is even more aggressive. But whether they can continue that journey really towards neutral, or depending where you see neutral, maybe even below, I think that is a question. Probably not for October, but beyond October, December for 26.
How concerned are you about the labour market in the US? I mean, clearly that has become more of a concern for this Federal Reserve, and that is part of the rationale for moving lower on rates. And to what extent does that adjustment in rates actually materially impact the labour market? Do we have clarity in terms of the time frame on?
We clearly don't, exactly. I mean, first of all, we have a lot of contradicting data, right? We know that the labour market is weaker than we thought earlier from these revisions. You saw last week, by the way, very strong retail numbers. So somehow the consumer is not seeing the labour market as weak as one would expect, because you would think they hold back consumption and start saving more. That's not the case yet. Now, there are legs. Monetary policy in the labour market, we'll have to see. I mean, there is a very strong supply side argument, and there is less migration. We have the news about the H-1B visas, right? That's another sign that there is a reduction in the inflow of labor, which was a very, very strong factor in the last few years, where you had a lot of labor supply. Now, if you reduce this, your break-even number, the number you monthly need in a way to keep the unemployment rate steady, will be much lower than it was in recent years. And so you could end up having a relatively low job growth, but unemployment staying at 4.3, 4.2, 4.4, but in a range which is pretty close to what we call the NAIRU, the equilibrium unemployment rate.
And possibly in that scenario, wage growth remains sticky.
Exactly. It's not clear. I mean, take the H-1B visas. Now, if you really cut off the foreign supply, and I'm not even denying that there's abuse or so, but the fact is that if there were these hundreds of thousands of Americans just ready to take on these jobs, right, and then you one-on-one just switch to them, that's one thing. If you suddenly no longer have the inflow and you have to pay Americans more to take those jobs, to substitute the inflow of foreigners, that tends to add to wage pressures, right?
I want to switch to the BOE, because you've got a view. We saw this interesting split, the 7-2 split, and you've noted that in your note and how that kind of factors into your view going forward. But you still hold, and you've got some caveats around that, but you still hold the view that November is live for the BOE. That in fact they go again in November. Why?
Yeah. Well, I mean, clearly the committee has remained quite conservative or gradual and very, very careful in their language. That's why we say it's a very fine line now. What we are hopeful for is that September, that inflation print you saw last week, was the peak. And so if we have one more print and you realize that it was the peak, inflation is coming down, we think the committee may become more willing to look forward, see that inflation is moving towards targets, and implement that cut in November. That's a tight call.
Okay, that's a tight call. And November as well is also the month when we get the budget. Is there a path in this budget, this November budget for this UK government, towards growth preservation, but also addressing fiscal stability? Is there a path that they can factor into that budget that would both assuage the markets, but also keep growth on a modest upward trajectory?
I think there is. I think there's a lot, though, how it's about perception. Right? Yeah. I mean, if you take the UK fiscal position, you compare to some of the ones in Europe or elsewhere, it's challenging. But maybe not as challenging as when we look at the media, look at something with market reactions, as they make it to be. And so it's really, I think, a lot about this government now, convincing markets, convincing business, that they are, trying to promote growth, be careful on what taxes they increase if they do this. And so I think if there's the right communication on this and they can convince markets, there should be a pass.
Okay.
To that.
It comes down to communication, and there's an argument that this government hasn't always been on top form when it comes to communicating around certainly policy decisions. So we'll see if they thread that needle. And you touch on Europe, and so I bring in what happened on Friday with another downgrade for France and an upgrade, interestingly, for Italy. And there's a Bloomberg report today on how France is replacing Italy as the kind of problem child of Europe. Do you kind of... Is that a reasonable way of framing it? How problematic is France for the Eurozone right now?
Yeah. I mean, first of all, what you see a week earlier, there was a downgrade for France, and you saw an upgrade simultaneously for Spain. So what you see is now France, which is considered core, and Italy and Spain more the periphery, now moving towards the core, and France, relatively speaking, losing out. Look, there's no doubt that France is extremely important for the Eurozone. It is a core country in the sense of the size of it being a founding member. In principle, you speak to people and we look at the numbers, it should be possible for them to, cut on expenditure and putting the debt on the fiscal, on a sustainable path. The question is it politically feasible? And then sometimes people say it's not a fiscal crisis, it's a political crisis. Well, politics is fiscal and fiscal is politics. So, and that, frankly, we don't see it how France will address this and resolve it.
How do we think about that factor then, and the political crisis that's linked, as you say, to the fiscal situation in France, playing into ECB decision-making in 2026, at a time when we get that fiscal impulse really coming through from Germany? At least that is the view from many. Is this an ECB that is caught in that conundrum? They've steered down to 2%. Are we looking at a central bank in Europe that's going to have to raise rates next year on that fiscal impulse from Germany?
Well, what we see is at the moment still an economy that is relatively weak. We're going to get PMIs today, also tomorrow. Yep. I think that's going to be very important. The Germans have to first implement the fiscal stimulus. They're going to take some time. We think, the growth rates in Germany should be picking up on a quarterly basis, but it probably reach until the fourth quarter next year, so they really feel that impact. And look, the ECB will look at both. They will look at growth, but in particular, they look at inflation. They don't have the double mandate or the dual mandate as the Fed has. And so far, it's a nice, stable 2% inflation. They're forecasted actually to come in slightly below 2% on average. So we see them on hold. We think they do one more cut in December, which is, by now out of consensus. But then we think they stay on hold rather than starting to hike again.
The ECB does one more cut in December?
We have it for December. It's, again, a fine call, but we expect... You saw the problems with Porsche. You see, there's a lot of things coming in, we think, in the fourth quarter that may make them decide in December, look, why don't we ease a little bit more?
Christian Keller, always smart with your insights. Thank you so much for joining us around the desk, of course, this Monday morning. Christian Keller, Head of Economics Research at Barclays. Coming up, France set to follow the UK, Canada and Australia by formally recognising the state of Palestine. We bring you the details on that story next. This is Bloomberg. French President Emmanuel Macron is set to recognise the state of Palestine during his address at the United Nations General Assembly later today. Denmark is working on a plan for recognition, according to its foreign minister. And on Sunday, the UK, Canada and Australia announced their support for a two-state solution. UK Prime Minister Keir Starmer says both Israelis and Palestinians deserve to live in peace.
In the face of the growing horror in the Middle East, we are acting to keep alive the possibility of peace and a two-state solution. That means a safe and secure Israel alongside a viable Palestinian state.
US President Donald Trump and Israeli Prime Minister Benjamin Netanyahu criticised the move, arguing it would incentivise Hamas and prolong the war with Israel. Bloomberg's Jemana Pasechi is in Dubai. What are we expecting then, Jemana, to hear from France and the other states? To what extent they're going to be fully aligning with the UK, Australia and Canada? And what is that US response likely to be?
Yeah, so in many ways, this was an international coordinated move. Many of these Western nations had hinted early in the summer that they would move to recognize Palestinian statehood at the UN General Assembly. Yesterday, we had 3 countries in rapid succession, starting off with Canada, shortly afterwards Australia, and then the UK announced that they were formally recognizing Palestine as a state. Later in the evening, Portugal followed suit as well. That would take the total number of UN member countries that have actually acknowledged a Palestinian state to just over 150. And of course, very significant that in terms of G7, you would have what is expected to be France later today, Canada and the UK, the first G7 states to do so. Now, of course, this is largely symbolic. There are no internationally agreed boundaries for a Palestinian state. There's no army, but very significant because it does just add to this growing international cry from many Western nations for the Palestinians' right to self-determination. And you just heard there when UK Prime Minister Keir Starmer is saying that also it is because they want to keep the prospects of a two-state solution alive. Now, the Israeli Prime Minister was very quick to respond. The Prime Minister Netanyahu saying that this is categorically rejected by Israel. It is essentially being perceived to be a reward for Hamas, a reward for terrorists from their perspective, and that the response from Israel, particularly in response to the nations that have moved to make this announcement, would come after he returns back from the UN General Assembly. He will be addressing the UN General Assembly on Friday of this week. Afterwards, we'll be meeting with President Trump. So the response should be coming after that. Now, in terms of the US and their own response, so far, nothing official on back of the various announcements that came yesterday. But what we do know is the U.S. have been very much opposed to any unilateral declaration of a Palestinian state. Earlier in the year, France and Saudi Arabia held a summit to work towards a two-state solution at the UN. This was back in early summer. The U.S. boycotted that summit. Last week, the UN also passed a declaration by majority moving towards a two-state solution that was categorically opposed by the U.S. Morgan Ortagus, a deputy senior envoy to the Middle East, saying that this was nothing but a publicity stunt and would be a reward for Hamas. So essentially what you have here is a growing split between the U.S. and its Western allies when it comes to the Palestinian ultimate solution and working towards a two-state framework. The U.S. have not been in favor of unilateral declarations, but at the same time, they do say that time is running out in terms of securing a ceasefire. And of course, President Trump has reiterated time and time again that he wants to see Hamas release the hostages.
Yeah, and it's a reminder, isn't it, of how far things have moved from having a two-state solution as being the primary framework for the international community when thinking about how to solve this crisis. Horizons Middle East and Africa anchor Jemima Pasechi, thank you with that important update, of course, out of the region. Meanwhile, President Trump has described Charlie Kirk as a martyr for American freedom. He was speaking at a memorial service for the conservative activist who was shot dead at an event in Utah earlier this month. Kirk's widow, Erica, also spoke, saying she forgives her husband's killer. Coming up, the United Nations Security Council set to discuss Russia's latest violation of Estonian airspace. That is next. This is Bloomberg. Good morning. Welcome to The Pulse. I'm Tom McKenzie in London. These are your top stories. President Trump hikes visa fees for skilled workers to $100,000, sparking chaos for corporate America. Companies urge staff to return to the US and halt overseas travel. US lawmakers arrive in China on a rare visit days after Presidents Trump and Xi finalized a deal for TikTok. Plus, the UK, Canada and Australia formally recognize a Palestinian state in a break with Washington. France is set to follow suit. To the United Nations now. Security Council meeting today at Estonia's request to discuss a violation of the country's airspace by Russian fighter jets. Bloomberg's Oliver Crook is in Berlin, has been following all of this for us. Ollie, to what extent is Estonia taking a hard line on this? What has their response been so far to this violation of their airspace?
So they've responded in a few different ways. One, they wanted to convene the United Nations Security Council, which will be happening in New York in about 5.5 hours' time. That meeting will begin to discuss the the occurrences over the last few days. They've also triggered Article 4 of NATO, which is a consultations for NATO allies to discuss any sort of event that has in some way jeopardized or threatened territorial boundaries, which is what happened on Friday, according to the Estonian authorities, when 3 MiG-31 Russian fighter jets entered Estonian airspace for a total of 12 minutes time, which obviously is something that the Estonians have been extremely concerned about from the very beginning of the war, their own sort of sovereignty and the possibility of the Russian threat. And just to say a couple of things to why this sort of incident is different. You have had a number of airspace violations by the Russians for Estonia since that they joined NATO, dozens and dozens of these. They really quieted down quite a bit when the war in Ukraine started. This is the 4th air incursion that we have had this year for Estonia. And just to add a few couple of things, the longest one that happened this year so far was only 4 minutes. Now we're talking about a 12-minute violation. We should say that Estonia is a very small country, so 12 minutes of air, flight time is quite a bit of distance to cross. We should also say that these were very modern aircraft. There were 3 of them. They were armed. These are the kind of advanced fighting crafts that can carry nuclear payloads. So these are all of the things. Not to say that they were sort of actively hostile or looking to target anything, but these are the kind of pushing up against the elements of the NATO border that the Russians have been doing and that NATO is extremely concerned about. We are, of course, waiting for a reaction from Donald Trump, a full reaction. On Friday, he said he didn't love what he saw on Friday, or yesterday he said he didn't like it. He also was asked in a press conference whether or not he would defend the Baltic countries and Poland, to which he said he would. But again, we're watching forward to that meeting of the UN Security Council in just a few hours' time in New York.
What about the economic response, Ollie? What measures can Europe pursue to put further economic pressure on Russia?
And this is sort of obvious, Tom, but it is cutting basically the fossil fuels that come into Europe. Again, as we have been discussing, now the EU has put forward a proposal to basically cut all LNG from coming into the European Union. That is something that originally the European Union was planning to do by the end of 2027. The proposal came on Friday from Ursula von der Leyen. They want to push that up a year earlier, i.e. by the end of next year, there will be no LNG that crosses into the European Union. That being said, Tom, last year, 19% of all the gas that went into the EU was still coming from Russia, a state of affairs that Donald Trump is obviously not very pleased by. We spoke to the European Energy Commissioner about the move and what the impact could be economically on Europe. Have a listen.
So what we're doing now is that we are banning import of Russian LNG. We're also doing other measures that maybe we can get into later, but I think that this is definitely the most important thing that we are announcing today. This will have big effects on the revenue in Moscow, and of course it is totally unacceptable that we are in a situation where we are still in Europe, although we've brought our imports down quite significantly, we are still importing Russian LNG, and this has to stop, and that is why these sanctions are now being put forward.
And Commissioner, I think that potentially one of the signals that people will take from what we've seen in terms of the action today, we should say that last year 19% of all the gas that came into Europe was still coming from Russia. The signal many may take from this that it takes Donald Trump to get the Europeans to do basically what they've known that they've had to do for a long time. To which you reply, what?
To which I reply that we have actually, since the war started, brought down significantly our consumption of Russian gas. It used to be 45% a couple of years ago. Now it's 13%. But I do acknowledge that that 13% is still far too much, and it is totally unacceptable. So I also welcome that the US and the American president is now leaning into this debate. We need to put as much pressure on Putin as possible. We need to do our part in Europe for sure, and we appreciate that the US is also doing their part.
And so, Tom, that action would target LNG that is coming from Russia. A couple of final points here. There is still pipeline gas that is coming from Russia into the European Union that is not covered by this. There is still crude oil coming directly into the European Union. That is down to carve-outs that exist for Slovakia and Hungary. If Trump is really upset about it, maybe he can bring some of the pressure to bear on those countries that the Europeans have failed on. And, of course, the last major step here for the Europeans is the discussions around the frozen Russian assets, of which there's more than 150 billion euros worth of it that are still sitting there. They're trying to find different sort of creative ways to monetize, and that is a conversation that really kicked off in earnest on Friday. And we heard a little bit about Christine Lagarde and from Valdis Dombrovskis about how they would go about doing that, but the details really are not yet fleshed out at this point.
Bloomberg's Oliver Crook, thank you very much indeed. Some progress, but more work to be done then on that front. Thank you for the update. Meanwhile, the European Union is making progress with plans to provide loans to Ukraine using Russia's frozen assets. It is part of efforts to meet Kyiv's financial needs as the 3.5-year war grinds on. Kinga, Redlowska, Europe head of the Centre for Finance and Security at the think tank Rusi, joins me now from Brussels. Kinga, thank you for your time. Talk to us then about what the options are when it comes to these frozen assets, whether or not Europe can do more than just lend on them.
Well, to start with, Europe should still consider confiscation, but I guess this is out of the question now after Ursula von der Leyen address earlier this month, when she clearly stated that the assets themselves will not be touched. This certainly sends a very wrong signal to Kremlin and undermines Ukraine negotiating positions. What Europe is looking into now is indeed putting those assets that has been frozen into more risky investment programs. And this is something we at the Center for Finance and Security at Rusi have been calling for a long time now.
What has held them back? What have the arguments been for not making greater use of these assets that currently sit in Belgium?
Well, some point to legal arguments, but those have been clearly resolved. A number of renowned professors of international law offered their expertise and confirmed that confiscation would be a legal countermeasure. Some argue that confiscation would undermine the stability of the Eurozone. But frankly, Tom, we've seen that when those assets were immobilized, there was nothing really dramatic happening here in Europe, in European markets. So there are no grounds to think a seismic reaction can happen when we move forward with more aggressive approach towards those assets. And to put it frankly, if there are countries that are planning to wage an illegal war of aggression and they view Europe as a safe haven to deposit their reserves, maybe we are better off without them. Because fundamentally, Eurozone offers the most stable and reliable investment space.
And of these assets, Kinga, you're also warning that there is a risk that in the next 12 to 18 months or so, they could end up back in Moscow's hands. Why is that?
Well, it's because in the EU, sanctions, they need to be reimposed every 6 months. And for this, you need a consensus across the bloc. You need the vote from all 27 member states. And if, as we have seen over and over again, when every new sanctions package is being negotiated, there are countries that raise concerns and threat to block the new package and the reimposition of sanctions. But when it comes to Russian frozen assets, we also need to look into the stance of countries that are not so vocal about blocking other sorts of sanctions, namely Belgium and Euroclear, because obviously the stance of Belgium is effectively blocking moving forward with the assets.
This is all happening at a time when you put out a recent report, you and the team at Rusi, called Alternative Financial Systems, a Desire for Autonomy, Necessity and Opportunity. You're talking about the splintering of the Western-built financial infrastructure. What is going on? What are the risks? What are the opportunities?
Well, so alternative financial systems are instruments, institutions, and infrastructures that operate outside of the traditional international financial system, especially Western-based networks such as SWIFT. So these could be new messaging and settlement systems such as Chinese SWIFTs or Russian SPFS, but also innovative products such as stablecoins, cryptocurrencies, or CBDCs. And finally, this group also incorporates old systems such as Hawala or gold. But what unites them is that they provide pathways around or alternatives to the traditional established channel of global finance.
Where are we in this journey then, Kinga? How to what extent is this a watershed moment, and are regulators, the authorities responding?
Well, so it's a process. We need to look into the motivation of countries that are embracing those systems to offer tailored responses. And there are three key drivers that push those countries into developing those systems. First, it's the autonomy. So countries such as China and Iran want to insulate themselves from Western leverage, specifically sanctions. Then we have countries that embrace those systems out of necessity. They are excluded from the global financial system due to de-risking, and so they need to seek alternatives. And finally, there is a group of countries and actors that are looking for advantage. New products, they are high speed, they are low cost, they offer new features, and to put it simply, they are attractive regardless of the geopolitical context.
I'm just thinking of the fairly long-run hand-wringing, Kinga, when it comes to de-dollarization, and yet the dollar is still used in, a little over 50% of international transactions, well above the euro, well above the pound, certainly well above the yuan. There may be a response to this where people turn around and say, look, the dollar remains central.
Well, certainly it's a process, it's a marathon, it will take time, but we've seen acceleration of those developments. In terms of de-dollarization, how we call it at Rusi in our paper, we clearly highlight that this is a move not from one to another system, but from one to many. So we are witnessing multipolarization and diversification of the system. And so, dollar still remains the most reliable currency, and along with international framework established by Financial Action Task Force, it still offers the most popular financial framework. And recently, the President Trump administration embraced stablecoins, which will generate a massive demand for US dollar. So the dollar is here to stay, but as we move on, we will see those alternatives being developed.
Before we let you go, Kinga, I just want you to expand on those changes that are being pushed through by the Trump administration, because they do seem to be significant. That embrace of crypto, changes around stablecoin infrastructure. Does that position the US to be in a stronger place when it comes to the changes of some of this financial infrastructure?
In my opinion, yes, it does. And it's because one of the responses to the development of those alternative financial systems should be the response from both the regulators and the private sector. And especially if we are talking about addressing those that are looking for advantage, that are looking for more sophisticated mechanisms that provide low cost and high speed. The US certainly has made a step forward, while Europe is still considering and lagging behind in terms of regulation, but also what the private sector and private financial institutions based in Europe can offer to its clients.
Kinga, thank you very much indeed. Really interesting insights. Kinga Redlowska, Europe head of the Centre for Finance and Security at Rusi, with that report in terms of the changes around some of the Western-built financial architecture, but also with a view on what Europe and Ukraine can do in terms of tapping some of those Russian assets that currently sit in Belgium. Now, the UK government has approved a second runway at London Gatwick Airport in Prime Minister Keir Starmer's latest bid to lift the UK economy through major infrastructure works. The news comes as Heathrow, Brussels and Berlin airports were hit with flight delays over the weekend due to cyber attacks. For more, let's bring in Bloomberg's managing editor for space and aviation, Benedict Carmel. Benny, what do we know? Let's start with the Gatwick runway. Were we expecting this? How significant is it? What do we know about when shovels will be in the ground and to what extent is going to expand Gatwick in a significant way?
So the Gatwick Airport runway had been in the works and the planning had been going on for a couple of months. So this didn't come out of the blue, but now it seems like, yes, this is sort of the sounding bell and it's going ahead. When this will actually mean planes can take off from the new runway, nobody quite knows. The loose target is sort of towards the end of the decade, but if there's one thing that we all know with major infrastructure programs, in particular anything that has to do with airports, these things are typically delayed, so we shall see whether that is indeed at the end of the decade. The thinking going that, you know, if Heathrow can have an extra runway, then so can we. That's what Gatwick seems to be thinking, or the UK government. You know, it's something that sort of evens out the flows of traffic a little bit between those two airports. Heathrow itself hoping to get its third runway at a cost of more than £20 billion. The Gatwick one, looking positively frugal by comparison, is only about just a little bit more than £2 billion. So that would really help that particular airport. It's popular with some of the low costers and sort of as a secondary airport for overflow from Heathrow. So that would really help that airport to attract additional traffic.
OK, well, let's think about whether or not if they put cement in the ground, they can also put in place some infrastructure to stop these cyber attacks. Because, Benny, we had some significant cyber attacks again, or at least the impact was there when it comes to Berlin, Heathrow and Brussels airports over the weekend. Are things back to normal? What do we know about what happened?
So it's largely back to normal. This sort of started on Saturday and then rolled into Sunday. Any disruption usually takes a day at least to get back to normal. The actual sort of disruption in terms of cancellations was not that large. We had about just a few more than a dozen aircraft that couldn't take off at these airports. Most of them were affected at Heathrow. But for people on the ground, this was massively disruptive. We heard of massive lines, people waiting, essentially a very analog process that had to be reinstated to check in people manually rather than electronically. So that took a lot of time. Berlin was hit on a very busy weekend. It was the Berlin Marathon this weekend, so a lot of people were coming into the city to participate in this very popular race. So that was a very unfortunate timing. We don't know at this point who's behind it, but we do know it was a cyber attack, and we do know it hit one particular company, Collins Aerospace, that does all these sort of electronic check-ins. So again, the question will be, you know, how could this happen? What was the kind of redundancy that was built in? We've seen a number of disruptions at airports like Heathrow, like Berlin, and across the continent really. So it seems to be something else every time. But every time it does happen, these disruptions take at least a day, if not longer, to sort themselves out again.
And a very different type of disruption, Benny, facing Hong Kong airport, this time weather-related.
Yes, something that is really beyond anyone's control. So this is at Hong Kong airport, and we hear now that the airport might actually have to close down for 36 hours starting tomorrow, which would really be unprecedented. There have been closures at the Hong Kong airport in the past. 2023, there was a closure for about 20 hours, but 36 hours, that really would be a record. And it's a precautionary measure just because that hurricane, that typhoon is barreling down towards the region. Cathay Pacific, the big player at that hub, more than 500 flights a day, north of 1,000 flights in total at the airport. So you can imagine what a stoppage of more than a day might mean. That'll take time to sort itself out again, but that's the latest that we hear, that is indeed happening as soon as tomorrow.
OK, Benedict Carmel, thank you very much indeed for that update. So from airlines and the airline space to the auto space right now, one of the biggest laggards across your equity story, Porsche shares slumping after the luxury car maker cut its annual profit forecast and shelved a future battery-powered luxury SUV. The 911 maker said it would add more combustion engine and hybrid models to bolster its portfolio. The pivot is causing a €1.8 billion hit to operating profit. Parent company VW, Volkswagen, also slashing its annual forecast. It is yet another setback for Germany's auto industry, which is contending with high costs, of course, and muted sales. And you can see the share price reaction in the session today. Both of those car makers down over 7%. Porsche and its parent company VW. To banks now, BBVA has raised the value of its takeover bid for Banco Sabadell by about 10%, pushing the value of the deal to about €17 billion. The improved proposal marks a shift after months in which BBVA's top executives insisted there was no need or intention to sweeten the offer. And you can see the moves there, a little lower on Banco Sabadell by 3%. Coming up, Cathy Wood, founder, CEO and CIO of ARK Invest, gives her thoughts on President Trump's changes to the H-1B visa program. That is next. This is Bloomberg.
I thought the Fed's decision was a good one. This looks like a sequence of 3 moves in a row through the end of the year.
Would you have voted for 50 this week?
No, I don't think so.
Former St. Louis Fed President Jim Bullard there saying he would not have voted for 50 basis points. Fed Chair Jay Powell will be speaking tomorrow, going to deliver a speech on the outlook for the US economy. It comes as corporate America grapples with the potential impact of President Trump's move to curtail H-1B visas. Let's get more with Bloomberg's Valerie Teitel. Val, can we expect will Jay Powell touch on this as part of maybe a broader question about the labour market, about immigration? This is another move from the Trump administration that could cause ruptures.
Could cause ruptures and just could complicate the read on the labor market at the moment. He did mention in the press conference last week, he was asked whether is it tariffs or is it immigration that is affecting the labor market, and his clear answer was that it's immigration that's been steering the labor market at the moment. So this could add just a bit more unknowns to the muddle. You have to add to that the confusion even over the validity of the BLS data as well. But I think he will get asked on it. There is Q&A after his speech by the moderator. It'd be very interesting whether his gut reaction is whether this is going to be negative for U.S. economic growth or whether this is going to tighten the labor market in the near term, because those are two different policy paths, essentially, that Jerome Powell could I guess, harp on after this move by the Trump administration to add that $100K fee onto H-1B visas. Now, he has mentioned multiple times and in his press conference last week that college grads are having a harder time finding jobs. He's mentioned the unemployment rate for those unemployed longer than 27 weeks has really moved to almost a 10-year high if you take out the blip around COVID. And that could be something maybe he could hang his hat on, to think that the tightening of the visa program could perhaps tighten the labor market in the near term.
Is there a tech stock reaction to this news?
I think we woke up this morning thinking that we might see one, given the fact that Amazon is the heaviest users of these H-1B. You also add in Microsoft, Meta, even Apple into that top 10 list of heavy users. But it's really not knocked tech stocks that much this morning. And that comes after the fact that they all hit the Mag 7 and the NASDAQ hit an all-time high on Friday. So maybe not totally surprising we see them in the red this morning.
Valerie Teitel, thank you very much indeed. And the Fed's newest governor, meanwhile, Stephen Myron, is speaking at the Economic Club of New York. You can catch that live on Bloomberg Television from 5 p.m. London time. Up next, it's Bloomberg Brief. This is Bloomberg.